Well, good morning and welcome back to the Broadcast Retirement Network. I'm Jeff Snyder, and this is BRN Weekly for Saturday, September 26th, 2020. And our top story today, we'll get a healthcare update and take a look at the coronavirus vaccine timeline and implementation. Well, joining me now to discuss this and more is Lydia Ramsey. She is the healthcare editor for Business Insider, and she's also the editor of Dispensed, a healthcare newsletter that you can find on the Business Insider website. Lydia, thanks so much for joining us on the program this morning.
Of course, thanks for having me.
Well, you've got you and the team at Business Insider have your ear to the ground when it comes to all things healthcare. And what I figured we do in this episode is let's hear the latest when it comes to the vaccines. We're all waiting for a COVID-19 vaccine. What can you tell us?
Yeah, for sure. It's the question on everyone's minds, it seems like, no matter who I'm talking to. So we're obviously in the midst of three really big trials. These are looking at tens of thousands of patients apiece. They're being run by three drug makers: AstraZeneca, Pfizer, and Moderna. And so all these are kind of going on in tandem. AstraZeneca's in particular had a bit of a hiccup there, and one of its trials still hasn't resumed after, some interesting kind of potential side effects pops up around its vaccine. But a lot of folks are aiming for this fall timeline. You've heard the president say things like, we want a vaccine approved by election day, kind of timelines like that. And so we've started, as we kind of see what enrollment looks like and what's going on, we kind of have started to see a bit of our expectations shake out. We're seeing Pfizer really staunchly say they want to have data available by the end of October. We've got Moderna saying they expect it by November, AstraZeneca probably somewhere around there, depending on how much of a hiccup this pause kind of put on the system. But that's going to be really interesting to see what that initial data looks like. Of course, it's not going to be the full data, right? Like running these huge trials, it's going to take a lot of time to really understand what's going on, how people are responding, who's getting sick, because ultimately we're trying to figure out whether or not these vaccines can actually prevent folks from getting the novel coronavirus.
Yeah, and I think you make a great point. And as we've talked about it, you and I have talked about it on the podcast numerous times. I mean, this is a very accelerated timetable. And I know there are concerns about, even with the accelerated timetable and the FDA and other entities really serving as watchdogs, concern about what the impact would be. Are there side effects? And I think there's some people trying to pump the brakes a little bit, lower expectations.
Right. Yeah. You've seen a lot of folks really want to make sure that, trust is going to be paramount here. These are not vaccines that are going to go out to like a few hundred folks. These are vaccines that we're foreseeably trying to get to every American and trying to get every American to take. And so, making sure that Americans trust that vaccine and that they actually go out and take it is going to be an extremely high bar. And you've already seen, folks start to raise that kind of hesitation and that concern, like, if things go too fast, can we trust it? Who can we trust? And one of the things that the FDA is trying to do is really make it clear what data it's looking for, really make sure that folks understand what's happening. They have this meeting coming up at the end of October where they're going to meet with the three kind of leading vaccine makers, and they're going to really spell out, what they're looking for, what their expectations are, what's going to qualify to say, yes, you can get authorization to use this vaccine. And again, I think that bar is increasingly going up. I just saw headlines, this week about how the FDA is trying to raise its bar and things like that. So I think that's only going to help if we have a pretty high bar. And I'm hoping that we can at least read through all the data. That's like step number one. And if we can, that we can really trust in the data and the decisions that come out of those.
Yeah, I think you're right. I mean, we don't want to we've already had this horrific event, extraordinary circumstances that's impacted so many families, both here in the US and around the globe. We don't want to take a step backwards. Lydia, any sense in terms of distribution? I mean, I would think, and I'm not an expert in epidemiology or a doctor for that matter, but in terms of distribution, I have to think that the most vulnerable among us would, elderly, people with comorbidities will get this quickly. Any thoughts there?
Yeah, so it's something that the government has put out some plans around. I think it was last week, wow, time is moving really weirdly. The director of CDC, Robert Redfield, he presented in front of Congress and kind of laid out how they're expecting to kind of vet what makes the most sense for a vaccine rollout. So to be sure, like an emergency use authorization, that's what's going to come first if these vaccines do work the way they're supposed to. And under those emergency authorizations, the FDA is probably going to put some parameters around it. We saw this with the emergency approval of remdesivir. And so they said, only hospitalized folks with such and such benchmarks of really progressing, things like that. Like maybe they were on ventilators, maybe they were in really serious care. And since then they've evolved and kind of opened it out a bit more. I would expect to see something similar happening with vaccines where it says, folks with certain comorbidities, they get it first, or, maybe high touch folks working in emergency departments, they get it first, things like that. So I think we'll see it that way. But really the big hurdle is gonna be that we have to get this to so many Americans. And so I'll be curious to see, I can imagine a million hiccups from, now there's questions about will government organizations like Medicare and Medicaid actually cover it, under what circumstances? Will they cover it under an emergency use authorization or only if it gets fully approved? So there's going to be a lot of interesting loopholes, some surprise bills, but even just like shortages along the way. I'm so sure like it's going to be impossible not to run into issues. This is not your typical flu vaccine where, folks are getting it, but not everyone's getting it. That's going to be really tough. I know that for me, being someone who's relatively healthy and things like that, I'm not expecting to get a vaccine until next summer or early next fall at the earliest, I would say.
And Lydia, just because we have a vaccine doesn't mean that we just wash our hands or wipe our hands clean, to use a phrase from Dr. Fauci and Dr. Birx, and we just say, hey, we're going to go back to standing within 6 inches of each other, right? I mean, while this is being distributed and people are using it, we've still got to maintain all the parameters and protocols that are in place: social distancing, wearing a mask, washing our hands, doing all the right steps to not expose. Because you are right, you're young and also very healthy, but you don't want to be a carrier and give it to your parents or your grandparents or a friend of the family.
Mm-hmm. Right. It's one of those things where it'd be really nice to have a big mask burning ceremony where we just toss everything from the pandemic phase of our lives in the trash. But yeah, unfortunately, that's not going to be the case. It's gonna be a weird, wacky time. It's one of those things where I've started to think about the election in those terms too, of like, realizing that maybe on election day we won't know by midnight who won and who lost. So it's just recalculating those expectations are quite difficult, but it's something we're getting increasingly used to, I would say. Yeah,
this has been a crazy, we're going to look back on this year, a decade from now and say, wow, do you remember when? Just like we did with so many other significant events. Lydia, it's always a pleasure chatting with you. Very interesting, and people should certainly check out Dispense. Again, you can find that under Lydia's profile on LinkedIn, but also businessinsider.com. Lydia, pleasure talking with you. Have a great rest of the week, and we'll talk to you soon.
Thanks so much.
Thanks, Lydia. And when we come back, we'll take a look at some of our best segments for the week. You're going to want to stay tuned right here on BRN Weekly. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms? Especially for the smaller businesses. I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
The windows on our homes, they protect us and the ones we love, but they do much more. At Renewal by Andersen, making your home more comfortable is at the center of every window we make. It's why we custom build our windows in America and install them in as little as 1 day. It's why we build our frames with exclusive Fibrex composite material that's 2 times stronger than vinyl. It's why our glass helps keep your home warmer in winter, cooler in summer, and quieter all year long. It's why we stand behind every window with a 20-year limited warranty. Why not help lower your energy costs while giving your home and family the best? Call 1-800-835-6525 to schedule a free in-home consultation. Buy one, get one at 40% off with this special offer. Plus, get special financing with no money down, no monthly payments, and no interest for 1 full year. Renewal by Andersen, the better way to a better window. Call 1-800-835-6525 now.
Welcome back. On Wednesday, I sat down with Rise Up founder Tara Falcone about the impact of the new payroll tax deferral on the military and federal employees. Let's take a look.
We received our first paycheck actually today, and you see that 6.2% increase off of your base pay, and you know that it's just a temporary, it's a Band-Aid, right? The government is trying to do something, for whatever reason. It seems as though they're trying to get cash back into the pockets of Americans, whether it's, to save Christmas in 2020 or whatever it might be. But at least right now that it's not actually going to be forgiven, or at least that hasn't been pushed through. And so it's just sort of an annoyance to me, right? It's like you have, September, October, November, December, that you're going to see these increases. And then all of a sudden come January, that's then going to be taken out of your paycheck. And so, for many military families, for all military families, you can't opt out of this. So in other private companies, they have the decision whether they want to participate in this payroll tax holiday or not. Government and the military do not have that choice. And so, it's nothing that we have a choice over. We have to participate in this. We have to plan accordingly. Again, we're adaptable. We're used to changing circumstances, but frankly, this is just very frustrating. There are many military families who already are struggling living paycheck to paycheck or on one income or in the middle of a move or whatever it might be. And now all of a sudden you're asking them to also plan basically 5 months down the line to, quote unquote, pay back this tax holiday money and not use it in this current time frame. And it's just a level of planning and kind of administrative headache that frankly we don't need. So I think one of the things I want to make clear is that as of right now, it's not going to be you having to physically write a check to the IRS to pay this back. The plan as of now is for your paychecks in 2021 between January and April to essentially be lowered by that same amount to pay back that money to the IRS. So really what I recommend that people do is siphon off that additional amount, that additional 6.2% into a separate savings account. That way, when your paychecks in the beginning of 2021 are lower, you can then move the amount that you were getting back into your bank account. So it's as if you're getting the same amount every month. You're kind of smoothing it out instead of having this bump now and then this lower amount later. You're kind of equaling them back out as if the payroll tax holiday never existed. What I would caution people not to do is to spend that money, especially if you're the type of family that is living paycheck to paycheck. And that's why I think it's just very frustrating. I think it's this, blanket policy that, frankly, out of touch people in government are making, and really not thinking about the micro level, family by family level of what this is going to do to them and how much planning it's going to require of them. Because if you're living paycheck to paycheck right now, and all of a sudden your paycheck looks larger, and maybe you're not, thinking, or you're not kind of as in the know about why it's larger and then what's going to happen to you 5 months from now, you're probably going to feel, pressured to spend that money or to use it to pay down, debt that you already have or something like that. And then you're going to find yourself in a worse off position position come the beginning of the year. And that's what we want to avoid. And I think from a behavioral finance perspective, the less factors you can throw at someone, or the less changes you can throw at somebody, the better, right? The more that they're used to the circumstances that they're operating in, and the kind of more expected those circumstances are, the better and easier they are to plan for. And now all of a sudden, like I said, it's like a 4-month up and then a 4-month down. And you're really asking a lot of people, especially after they've, as you mentioned, been quarantined for months, they haven't gone out, they've probably deferred a lot of expenses, and holidays are coming. And I understand maybe, there are economists in government that are thinking, oh, let's infuse, the American people with more cash and then just take it back later. And frankly, for individuals, it's a recipe for disaster.
And on Thursday, I sat down with millionacres.com editor Deidre Willard to discuss the impact of the new Federal Reserve inflation policy on real estate investment trusts and commercial real estate. Let's take a look.
It's going to continue to be a good time to invest in commercial real estate, and certainly it's going to be a good time to continue to invest in real estate investment trusts. One of the things that we're watching right now is which of the real estate investment trusts are going to make big acquisition moves, and I think we're going to see a lot of that coming up soon. Some of the bigger office REITs are amassing capital and then getting ready to deploy that capital. Right now, commercial real estate rates haven't come down, but there is the hope that they will do so soon. Most REITs are traded on the stock market, so you can buy and sell them just like stocks. They tend to move a little bit differently than like tech stock. Tech stocks, obviously, we've seen in the past few weeks, they can go up and down dramatically. REITs tend to do that a little less. They tend to be a little bit more stable. REITs do provide dividends. One of the things that we've seen right now is that some of the REITs have lowered their dividends or suspended them temporarily, but that's always a short-term thing. Some REITs have actually now reinstated their dividend or increased their dividend as they feel more confident, partly because they are getting those rent collections and they are starting to see things get a little bit more promising in a lot of sectors. Well, it depends on how much risk you're comfortable with. So hotel REITs are down compared to other REITs, but areas that are doing particularly well would be warehouses. Obviously, we've seen the rise of e-commerce, so we're seeing warehouses, data centers. We're also seeing a lot of interest in housing REITs, multifamily housing as well. Right now, it's fascinating to me because we're really seeing two things. We're seeing a lot of companies move toward work from home. We're seeing companies offer incentives for their employees to move out of major areas. Stripe announced that last week. But we're also seeing other companies saying, we're going back to the office at some point. And what I think is happening is those early productivity gains that people were so excited about when people first started working from home are kind of starting to go away, and people are getting restless. A lot of people want to go back to the office. I've seen several different surveys and studies that show the majority of people are ready to go back to the office. We miss our coworkers. It's just sort of the human condition.
Well, that wraps up this episode of BRN Weekly. Have a topic of interest or someone you think we should talk to? Then drop us a line. And don't forget, for all the news in retirement, markets, technology, personal finance, so much more, check out our daily newsletter, The Morning Pulse. We're back again tomorrow with members of the media, academia, and financial services as we analyze all the news this week in retirement, markets, technology, so much more on the BRN Sunday podcast. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.